top three things in my notebook this morning. Number one is inflation accelerating. Point number two is going to be the Japanese yen versus the dollar. And then finally, the U.S. financials on the stock market side. So first on inflation accelerating, in case you didn't know, now you know, both the CPI and the PPI in the last 2 days accelerated sequentially. But these things are going to really accelerate next month and then after that and after that. Because why? Costs are rising. So again, you're seeing that prices paid across the board, and you're also seeing inflation-oriented assets like commodities themselves outperform growth-oriented assets, specifically the S&P 500 by a very wide margin for the year to date. So again, be long inflation, but don't confuse that with being long growth. Being long growth slowing, which would include utilities and gold in particular, is a better way to be long of that. Second thing would be the dollar versus the yen. I mean, now we have really this kind of like bifocal, really currency burning effort between the Treasury and the Fed. Now again, the Fed, you know what they're doing, which they're trying to price fix effectively interest rates, which I wrote about this morning in the early look note. But again, Jack Lew making comments this week. Again, this guy's been a little quiet, and that's been a good thing. He is the descendant of one Wesley Mouch, of course, and he is worried about low inflation. Telling the Europeans they got to inflate, telling the Japanese they got to inflate. I mean, so basically you have this bifocal setup of down dollar policy, both fiscal and monetary. So again, that's very bad. And even the yen looks good relative to that, which is saying something. So again, the yen successfully tested and failed versus the dollar's breakdown, breakout line, depending on which way you're looking at it. But obviously, bullish yen is what I'm talking about, of 102.98. Finally, the financials. I think as the financials go, the market will go. You saw that yesterday. As soon as people have come to conclude that dollar down, rates down is a bad growth strategy, it's bad for the financials. So again, yesterday the market turned lower, but the financials were down double what the market was down. Again, watch the financials very, very closely. Financials is next to impossible to see them rise in the face of interest rates being price fixed by the Federal Reserve. So those are your top three things.